Welcome. Today we're diving into something pretty significant. Could China actually use its huge pile of U.S. Treasury bonds, as a weapon?
Right.
Especially thinking about these recent U.S. tariffs.
Right. It's a big question.
We're looking at whether that's even feasible, how the U.S. might react, and, well, what it means for everyone. Could China selling off treasuries actually shake the U.S. economy? What are the moves here?
Well, the theory, the threat, it's quite direct. If China starts dumping U.S. treasuries in a big way,
Okay.
you probably see bond prices drop. And that means U.S. interest rates would likely climb.
Which makes borrowing more expensive for everyone, right? Businesses, consumers could slow things down.
Exactly. It ripples through the whole economy.
So, okay, the U.S. wouldn't just sit there. Our source mentions Treasury Secretary Bessent. What can they actually do?
Secretary Bessent hinted, suggested, that the Federal Reserve and the Treasury could intervene, possibly bringing back quantitative easing.
QE.
QE, right.
Right.
Remind us quickly what that is. Basically, it's the Fed injecting money liquidity into the financial system. They do that by buying up government bonds themselves.
Ah, okay. To prop up the prices.
Precisely. Support bond prices, keep interest rates from, shooting through the roof.
So the Fed buys the bonds, China sells.
Yeah.
Seems neat.
Yeah.
But are there downsides? Always downsides, right?
Yeah, usually. Yeah. While QE could stabilize yields, pumping all those extra dollars into the system, it tends to weaken the dollar.
Weaken the dollar. Okay. And what does that mean for China?
Well, interestingly, a weaker dollar often means a stronger Chinese yuan, relatively speaking.
A stronger yuan. Sounds good for China. No. Makes their money worth more.
You'd think so, but not necessarily. See, a stronger yuan makes Chinese goods more expensive for buyers in other countries.
Hitting their exports.
Exactly. Which are, hugely important for their economy. So this financial pressure tactic, it could backfire and hurt their own trade. It's a tricky balance.
So it sounds like China doesn't have a totally free hand here. What else limits them?
Well, one big thing is capital controls. The yuan, their currency, isn't fully convertible or internationalized like the dollar. They have strict rules about money moving in and out.
How does that play in?
If the yuan started strengthening too much because of US QE, and China tried to counteract that by just printing loads more yuan, they could risk serious capital flight. Money flooding out of China, causing instability in their own financial system. Their controls, meant for stability, kind of tie their hands here.
Okay, so their own controls limit their offensive options. What about their domestic economy? I've heard things aren't perfect there.
That's another key point. China's facing challenges right now. Domestic demand is a bit weak. Youth unemployment is high. There are those real estate issues.
Right.
So if they start printing money aggressively, maybe to manage the yuan or stimulate things, they risk making inflation worse. That complicates their existing problems.
And then there's the whole world watching, I suppose.
Yeah.
The international angle.
Absolutely. If China's actions looked like deliberate currency manipulation, remember 2019?
Vaguely, yeah. They got labeled a manipulator then.
They did. Doing something similar again could really damage their global reputation. Could even provoke, coordinated responses from other major economies.
It really does seem like our economies are just so tangled up. China needs us as buyers.
That's a fundamental point. Their reliance on exports, particularly to the U.S., is a huge constraint. If they seriously damage the U.S. economy, well, they're damaging a massive market for their own goods.
So where are we now? Has China, or anyone else, started making big moves with treasuries?
As of now, things seem relatively stable, more watchful waiting. China's still a huge holder, second only to Japan, which is the largest, but no dramatic sell-offs reported.
But that stability relies on trust, right? Trust in U.S. debt.
Completely. And that trust can be affected by, political shocks, things like tariffs, sharp rhetoric. They chip away at that confidence.
Which brings in the psychology of it all.
Exactly. Economic warfare isn't just math. It's about perception, leverage, timing. Every statement, every move from Washington or Beijing, the markets are analyzing it constantly.
Okay, let's try and wrap this up. So China could theoretically try to use its Treasury holdings as a weapon, but it's seriously limited by the U.S. potential response, like QE, by the risk to its own exports from a stronger yuan, its domestic economic problems, capital controls, and potential global backlash.
That sums it up pretty well. The deep interconnectedness and the risk of sort of shooting themselves in the foot, it creates this very delicate standoff.
So a final thought for you listening. Given this complex balance, this economic interdependence, and all the mind games involved, what kind of unexpected event, what wild card, could actually change the game and tip these scales? Something to think about. Thanks for joining our deep dive today.